Okay, so welcome back, guys, to another price action learning video. So last time we stopped at trend lines and trend lines support and resistance. You would remember that if we draw any two lines connecting two swing lows means this one is sorry, this one is swing high and this one is the swing low. So any two points on the two swing lows or higher highs and higher lows or lower highs, so we can draw a trend line. So again, this one is the basic thing. And again, uh, if the high is formed and if we draw a zone around there, that becomes the uh, top floor or the resistance zone for that stock or the performing index. Again, so we will move forward and we will try to learn some advanced concepts like price action patterns, like channels, flags, pennants, head and shoulder pattern, and double bottom, double top, etc. Inverted head and shoulder. So if it is forming in bullish side, it is head and shoulder, and if it is forming in bearish side, it is inverted. So just don't confuse it with the name, just try to memorize the patterns and how it looks. Okay, so let's try to bump up the time frame. Okay, so the basic patterns are nothing but more or less support and resistance only. Okay, so as we know, stock moves in waves. They do not go straight up or they do not go straight down. So, stock moves in waves, so it will make a first high, then it will definitely pull back. So again another move, then pull back, then again move, then pull back. And when it starts making new moves, new highs or new lows, we call it as a sideways. And if it breaks the range again, we call it as a downtrending market. And again it moves, it pull back, it makes a move, it pull back, it makes a move, and it pull back. Again, this is the normal structure of the market. So whenever the market makes its first move, the continuation move that follows most of the time is a flag. Most of the times, stock pullbacks near its trend line we draw previously, or any key moving average like 10, 20, 50 day moving average, and a small pullback will form, which looks like a big move, a small pullback, and the probability of continuing this big move is quite in the upside direction. Okay, so the next again big move, then pullback, a flag is formed, again big move. So the flag comes in 2-3 sizes and forms. Okay, so the first one is normal, this flag, again something like this one, some looks like this one, some looks like this one. Okay, so try to avoid flags which looks like this one. Okay, so flags which are going upward and it is forming a channel, something like that. So try to avoid such flags. So another pattern which is head and shoulder pattern. Stock is trending up, it makes a pullback, again it makes a new high. Normal structure of the market. Okay, then it pulls back, but it pulls back to the previous level. Then it tries to go make a new high, but it fails to make a new high, and it fails to make a new high and pulls back to a previous level. So again, we call this pattern is called as head and shoulder pattern. This one is left shoulder, this one is head, and this one is right shoulder. Okay, so when this stock breaks down from this pattern, it is a bearish pattern. It's a bearish pattern, and when it breaks down, the momentum and the probability is quite high with this pattern. Same for this one. Stock fails to make new highs and it breaks down. So again, if we try to correlate it with the support and resistance, this one is the resistance and this one is the current support region. When the support region breaks down, it falls. When the support region breaks down, it falls. Okay. So more or less there is possible pullback, but try to enter on the breakout as soon as it breaks out, because pullbacks here are very less, because the stock literally falls quickly. Okay, so if we try to invert it, it looks something like this. So the head and shoulder can form something like this. This is also a trend line, can also become a support region. Not only this horizontal level, but a trend line, a slanting line can also become a support region, so resistance zone. It can also look like this one, so something like this. So this is also a head and shoulder pattern. Just we have to train our eyes so that it can look the patterns anywhere. Okay, let's try to identify some of these patterns in the Nifty chart. Okay, so this one is the double bottom pattern. Okay, you can see it. Big move, pull back, again tries to break this low but fails, so this one becomes the resistance zone. When it breaks out, it forms a double bottom pattern, and where does it go? It goes up. Third one. So the double bottom and double tops you will find quite a lot in the near bottoms and near tops of the market. Okay, so let's try to connect some trend lines. This one is okay. So these are the two supporting and resistance line I drew. So in this zone, the stock Nifty was trading in this range, in this channel. So we could have bought here, sell here, buying here, short here, but it hit our stop loss. So again, if we try to lower the time frame, we find a couple of more setups. Oh, let's see if you can imagine the pattern here. Okay, stock makes a move, pulls back, makes a move, pulls back, and tries to break the low, but it cannot. So it is a head and shoulder pattern, and it moves up. So this was the inverted head and shoulder pattern. Again, stock makes a move, pulls back, stock makes a move but couldn't break this low, and it breaks the resistance zone. So it is a double bottom pattern. Again, there are many such patterns. So here it is another head and shoulder pattern. Stock makes a move, pulls back, another breaks the previous low, pulls back, tries to break the low but it cannot, and this one is the resisting trend line and it breaks out of this range, but it did not continue the momentum, but still it is a pattern. Okay, so another one, make a downward move, pull back, make a downward move, and again W pattern. Same here, 1, 2, 3 and 4. Okay, so the next pattern I want to teach you, and it is the most recurring type of pattern. These double bottoms, head and shoulder, the inverted head and shoulder, and double tops, they are quite rare to find, and these are formed only near tops and bottoms. So these patterns are extremely rare, but the patterns which occur over and over again and you can milk out some cash from these patterns are the flags. When the stock is in momentum and it pulls back or goes sideways or something like this, this type of patterns occur over and over again. These are quite profitable too and makes big moves. So let me show you some of the stocks which I traded this year and last year. India. Indian. So just concentrate here. Stock made a big move, went sideways. This was the resistance zone, and it formed a tight range, and it made a pennant pattern, and it broke out. Again, it moved higher, it pulled back, made higher highs and higher lows, and it broke out. Didn't continue the move, but still a breakout. It will occur over and over again and in many different stocks, so you don't have to worry about the setups, and most of the times you will find some trades. Okay, stock makes a move. This one is the high and this one is the supporting low, so this one is a flag and it made like, I don't know, 43% move. Okay, so if you put 10 lakh rupees, you got 4.2 lakhs in just 1, 2, 3, 4, 5, 6, 7 or 8 days. So it is quite explosive and quite rewarding type of pattern. Okay, so the next one is, there are a bunch of stocks I traded last year and this year, so I don't even remember most of the trades I took. Okay, so these type of setups I still trade. These are highly rewarding. Makes a move, goes sideways, and makes a triangle type of pattern, and it breaks out. Okay, so how much is the move? 68% in 7 or 8 days. So another one, let's try to do Must-Stop. This year and last year. Okay, so let's see. Stock make a big move, goes sideways, makes a pattern, breaks out. Stock makes a move, goes sideways and breaks out. Again it makes a move, goes sideways and it breaks out. Okay, so I bought it 2 times here and here. Okay, so I bought this stock 2 times this year and almost made 30% on my overall account from this stock only. So I made around 130 or 40% this year in 6 months. But biggest was Must-Stop only. I made literally 30% from this stock. And another one was KPI Green. So stock makes a big move, goes sideways, builds a flag pattern and it breaks out. So again, if you can see the watch list I still keep, is mostly of the flag patterns in there. Makes up stocks which are extremely hot, which are making explosive moves. This type of watch list I usually keep. So this one again, man infra, not that kind of good setup. But this one looks good. Okay, it's breaking higher highs and higher lows. Then again, same thing with this one. Again, it will take 2-3 days, but it looks good. Again, it will take 2-3 days. This one looks good. I enter on the hourly candle, so I wait for the close of it. So again, the next pattern, not pattern, but the key importance of the moving averages. So which feels like almost cheating. So if you want a cheat code in the market, moving averages are one of the biggest cheat codes in the market. So just focus on where this stock took support most of the times. Okay. See here, 1, 2, 3, 4, 5. Here now when it's started going up here. Okay, so you can see how these moving averages act as a key support and a resistance line when the stock goes up as a support and when the stock goes down as a resistance. Okay, so let's try to analyze in Nifty. Okay. So the green one, this green line is 200 period EMA. So here it found support here. Okay, so when the stock started downtrending, so here resistance near 50-day, 20-day. Here support. Okay, see how these moving averages are key levels for any given instrument in the market. So as I told yesterday, till the market breaks out of any of these two levels, I will consider the market as a sideways market until and unless they breaks out in either of these sides. Okay, so if it breaks down, so maybe I possibly start shorting the market, and if it breaks out, so maybe I will I will definitely start buying the market, buying stocks. Okay, so till then it is sideways. So how many days it can remain sideways? Extremely long. So if you can see the 2019 market, see this market was sideways for almost the entire year, almost 6-7 months. So that's how the market acts, because it made a huge move, so it has to digest some of the move it made. So that's why it's better to not get chopped around and sit in cash. So again, view moving averages, flags, triangles, and okay, so triangles I forgot. Because a triangle is basically time which looks like this one. Okay, so let's say stock is going up, and here sellers are sitting. So they start selling the stock, and when the stock pulled back, some buyers start buying it. Again, sellers shorted it, but it didn't. The sellers didn't let the stock to go past this high. So again, sellers dominated here, and again buyers also dominated here. They didn't let sellers to drop below this level. Again, sellers here, buyers here, sellers, buyers, sellers, buyers. At the point stock gets so tight that it has to make a move in either of here. Either sellers will dominate or buyers will dominate. So this is a neutral pattern. It can go anywhere. So it can go up or it can go down. This is also extremely very good setup, and it also makes huge moves. like yeah. So let's see. It is a short pattern, but you will get the idea. Okay, sellers sold here, buyers bought here, sellers sold here. They never let the stock go past this high, and buyers bought here. They never let the stock go below this level. So it became extremely tight, and the only way the stock could move is to break out in either in any direction. So it broke out in the upward direction. Why? Because the stock was in uptrending market. If the stock was in downtrending market, the probability of it breaking down is increased. Okay, so it broke out in the upward direction. Okay, so it can form without any market direction also. But I trade with the trend, so I usually don't trade without. I don't trade the stocks which do not have momentum, because the stocks with momentum are the best stocks to trade. So other than that, I think I covered most of the things I want to teach. So next on the next time we will meet, we will discuss about the next 2-3 patterns, which are VCP and cheat entry and cup and handle pattern. These are extremely good setups to grow your capital, even if it is extremely low size, but the setups are extremely well. Okay, and many other different type of setups, and why I don't use normal candlesticks which denotes high, low, close and open. I only use candlestick which denotes open and close only. So I just started ignoring highs and lows also from past 2-3 years, and it made me quite a bit of money. Okay, so better than normal candlestick. I just ignored the highs and lows, and this is making me a lot of money, and it is saving me to get up to get in every stock and get chopped around. Okay? So I will teach you in the next videos. So till then, stay healthy and stay safe in the market.